Just like that, the dollars dump, interest rates spike in the United States. There's your villain. Wasn't us, the Fed, who screwed the pooch. It's them. And interest rates spike to a level that the Fed does not have the cojones to do. And when that happens, stocks, bonds, and real estate at all-time highs, inversely correlated to a rise in rates, all collapse. There's your Klaus Schwab moment. In the matter of 1 second, dollars, stocks, bonds, and real estate all collapse and bring everyone down to a common denominator. There's your great reset. There is your massive problem. And when that happens, if you're not already positioned in precious metals, well, good luck to you.
The year 2004 could be considered one of the most volatile periods in the gold markets when gold hit a 16-year high at $458 an ounce and silver at $8.50 an ounce. According to the estimate of the World Gold Council, investment in gold has almost tripled from about 325 tons in 2001 to 900 tons in 2003. This sudden increase in interest in investing in gold is mainly due to the increase in geopolitical tension and the depreciation of the US dollar. The demand for gold as an investment instrument has increased in countries such as the United States, Japan, and Turkey. In the United States, people invest in gold to protect themselves against currency depreciation. However, India remained the largest consumer of gold. Every year, more than 800 tons of gold are consumed in the country. In today's video, we will share why Andy Schectman believes gold and silver will do exceptionally well in the coming years. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update.
The sideshow, that's the Fed. They're not going to do anything meaningful. The rest of the world, 90% of human population, that's what we all need to be focusing on.
The Federal Reserve has no intention of cracking down on inflation. We define CPI inflation right now at 8.5%, but the CPI is complete nonsense because it excludes food, energy, and housing. Before 1980, the CPI was calculated in a way that more accurately reflected inflation. In July of this year, the National Bureau of Economic Research, NBER, came out and said that with inflation peaking at 16.5%, or not, the number of peaks in June or July 1980, measured by today's standards, would have been 9.1%. They published this in July specifically to say that the 9.1% inflation that we had in July, had it been measured as it was before, would have been at least 16.5%. The simplest explanation is that the ideal of every nation is obviously to be able to print as much paper as it wants while controlling inflation. And the question is, how the hell do you do that? And the best way to do that is to lie about the rate of inflation, which is exactly what every nation does, especially the Federal Reserve. So, we have 8.5% inflation right now. We know it's probably 17% or 18%. Powell says he's getting tough on inflation. Tough on inflation has been raising the federal funds rate to 2.25%. It doesn't go hard on inflation at all. If we go back to 1980 and see what Paul Volcker did with 16 or 17% inflation, Paul Volcker blew up the economy. Paul Volcker blew up inflation. Rising interest rates is a real big deal. Every 1% interest rate increases today's represents $300 billion in interest paid to our creditors. It is a situation in which the figures on inflation and the Feds are lies. We increased the money supply, kept interest rates low, and paid people to sit on their couches eating cookies and playing video games, not producing things. More money for less things, fewer people producing things, fewer things to sell, and more money chasing after them. So cracking down on inflation is not what they're doing. If they wanted to address inflation today, the Fed funds rate would not go up to 3 or 3.25%. Stocks, bonds, and real estate are inversely correlated with rising rates and or have been at record highs. And that is the problem. It is death by hyperinflation or death by major depression. Investing in gold and silver has more advantages than any form of currency. While people give a lot of opinions, investing in gold has always been a clear winner. It was noted that after the 2008 US debt crisis, the world bought gold and silver in bulk. This led to a dramatic increase in the price of silver and gold between 2008 and 2013. At that time, the price of silver rose to almost $45 per ounce. Currently, the silver bubble craze has died down, but gold still shines.
I think the Federal Reserve I think they're full of crap. Let's just call it what it is. I don't think they have any intention on really getting tough on inflation.
That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.